I think Japan's economy probably did grow for the first time in more than a year. Second quarter figures are released on Monday. We'll be finding out the numbers then, but Mike Fern now has a preview.
Government spending by Japan and its biggest trade partners may be dragging the country out of its worst post-war recession. Economists forecast a 3.9% rise in gross domestic product in the latest quarter, after a record first quarter plunge. Exports rose 9.2% from the previous quarter as China, the US and Europe gave cash and tax breaks to consumers who bought new cars and appliances. But manufacturers say a strong recovery will take time.
The US should be back to growth by the first quarter of next year, and probably Japan and Europe maybe 1 year later. But in the meantime, emerging markets are going to come back much faster.
An export revival isn't enough to put Japan on track to recovery. Domestic spending makes up more than half the economy, and the government spent $260 million on stimulus.
They are going to get economic results from that. Is that sustainable growth that will drive earnings in Japan, that will keep jobs being created and drive domestic consumption, which they need, and wean them off their unbelievable dependence on exports? In my view, absolutely not.
40% of Japan's factories sit idle, pushing the jobless rate to a 6-year high and prompting record wage and bonus cuts. The Bank of Japan says reluctance of consumers and companies to spend means a strong recovery isn't likely in coming quarters. Mike Fern, Bloomberg News, Tokyo.